Well, the major indices mostly finished unchanged after early attempts in the session for the rally to go. It just didn't pick up any traction. Now, part of the reason all eyes were really thumbing through that long-awaited Senate health care replacement plan, which was greeted with cheers on Wall Street. Interestingly, all key segments of health care rallied, sending a seemingly contradictory message to Washington and to investors. Healthcare insurers, well, they soared on the notion of continued subsidies, but I also wonder if there are other reasons. Remember, 142 pages, no one read it all, but let's not forget, there were several programs in Obamacare to protect insurance companies from losses, including risk adjustments, risk corridors. When those backstops expired, health insurance companies bolted for the door. Still, they haven't fared too badly under Obamacare. Think about this, April 1st, 2010 until this year. Healthcare insurers have done an extraordinary job. They're up, United Healthcare up 286%. Anthem up 300%. Cigna up 431%. And by the way, I still think Cigna goes much higher from here, no matter how this D.C. saga plays out. Also today, hospital stocks are higher. In fact, they did better than any other part of healthcare. But remember, they have largely been big-time losers since the start of Obamacare. And then there are pharmaceuticals and biotechs, which were solid, although I prefer biotech because of those thin product pipelines for drug makers. But I also want to talk tonight about living. According to a recent Harvard study, our daily activities, thoughts, and feelings, well, and things that make us the happiest in life are the moments where we're, doing things. The things that make us sad is when we're at work, when we're resting, or using the home computer. Even reminiscing, by the way, thinking ahead, daydreaming, make us miserable, even if we're daydreaming about good things. Ladies and gentlemen, we have entered what millennials once called YOLO. You only live once. I mean, it's an experience all about us living for the moment. It's a mentality that's having a profound effect on our economy and the stock market. By the way, that Harvard study dovetails with a survey from the Fed back in 2010 that showed a profound twist in the way we saved money with the onus on buying stuff right now. We said forget about education, retirement, owning a home. And I think this trend will persist for some time, even as the nation's economy regains its footing. So that means we're going to continue to play video games, go to amusement parks, get on our motorcycles and jet skis, and, well, when we decide to have a vacation, we'll hit the cruise ship. Year-to-date winners from all of this living in the moment stuff, Electronic Arts up 43%, Carnival Cruise Line up 27%, Cedar Park up 11%. And by the way, now 63% of millennials say that they're saving their money to live that lifestyle that they desire, and now they're into small recreational vehicles, and it's reflecting. Check out the action in two of the biggest names in that industry this month. Thor up 14%, Winnebago. Millennials like Winnebagos up 37% for the month. So I think investors can buy any of the names I just talked about, in part because, well, you only live once. By the way, for tomorrow, take a look at these restaurant and apparel makers, two beaten down niches in the market, acting pretty good the last 2 days. I think some folks are looking for value. Also, after the bell, speaking of value, Bed Bath & Beyond will open significantly lower. They missed their earnings. The call's probably going on now, but I can't imagine this is going to change too much.